Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition on Business Today. And the company on our radar today is Tata Technologies. The IT products and services provider of the Tata Group has reported its June quarterly earnings. The revenue growth has been flat as compared to the last year on a year-on-year basis and consolidated basis. Revenue has stood at 1269 odd crore rupees, a percent higher from the same quarter last year. EBITDA has stood at 231 odd crore rupees. That's a drop of 7.6% compared to the June quarter of last year, while the margins have also narrowed to 18.2% from 19.9% last year. The net profit too for the company has seen a dip by about 15.4% year on year to 162 odd crore rupees as well. However, when we see on a sequential basis, the profit is up by 3%. And the revenue still is down by about 2.5% or so. Let's welcome our top guest on the show. The top management of Tata Technologies is with us, Mr. Warren Harris, the CEO and the MD at Tata Technologies. Warm welcome to you, sir, and thank you so much for taking the time out for this discussion. Let me kickstart by understanding from you, how have you assessed the quarterly earnings? This is the first quarter of FY25. We've actually seen softness on profit and the margins front. Could you detail for us or pen down to us some of the key reasons that have contributed to this, and
Sure.
What is the outlook looking like?
Sure, and thank you again for your interest in our company. You know, we think that the quarter was relatively solid, and we think we demonstrated some resilience. You know, if you look at our business is split up into two divisions: Tech Solutions and Services. Our Tech Solutions business is somewhat seasonal because it involves the reselling of software, which is typically back-end loaded. We do about 40% of the business in the first half of the year, 60% of the business in the second half of the year, when a lot of maintenance contracts are renewed. And we've seen that trend for the last 20 years. So the performance of that business, even though it was down sequentially, was largely in line with our expectations. On services, you know, we've completed now the transition from VinFast. If you remember, we have developed two electric SUVs for VinFast. So this time last year, VinFast was our largest customer. We've completed those programs, and we've managed to backfill the revenues from that organization with services revenue from our other customers. So again, I think we've demonstrated great resilience, not just in terms of protecting profitability, but also backfilling the business that was previously there. And we've now got a solid base from which we can look forward to consistently and sequentially driving growth across the remaining quarters of this fiscal year.
Okay. Are there already signs that you're looking at for a revival from here on? How is the margin picture really looking like for FY25 to you? You've narrowed down to 18.2%, but do you see coming back to over 19.9 what you had reported earlier and beyond?
Well, if you look at last year, you know, there was some catch-up billing that we did in the first quarter of last year that somewhat skewed the first quarter performance. But if you look at the overall year, we came in at 18.4% last year. You know, that's the run rate margin that we are looking to protect and build from. And we certainly expect to be able to do that. You know, our confidence in top line is really driven by order book and pipeline and the demand we're seeing from our customers. And this transition we're seeing within the manufacturing sector to alternative propulsion systems, connected systems, autonomous and shared, you know, we don't see any slowdown in the demand that we're currently intersecting with.
Okay. Especially I wanted to talk about the services segment that you also highlighted. It was in pain up until now, but do you see signs of reversal now coming in from Q1? Has it performed better than your earlier expectation of how it would? And what will be the key levers for growth for this segment going forward?
Well, we've seen the runoff with VinFast now over 3 quarters. We're through that. And I think the confidence that we have for the remaining part of the year is really inspired by the fact that we've got a solid base from which we can grow. So as I said before, the demand environment has not changed. That's providing tailwinds that we are expecting to intersect with. And without the challenge of grappling with a significant customer runoff, we fully expect to be able to drive growth consistently through the year, sequentially, and in terms of the full year.
Okay. You've also reported winning 5 strategic deals in the April to June period. Could you detail for us the kind of the nature of these deals and how significant would they be in terms of revenue potential going forward?
Yeah, we've won not only deals that are sizable, but I think the deals that we've won are strategically important. We've won a deal with a battery manufacturer, and I think that's important because it really extends our coverage of the EV value chain upstream. Typically in the past we've only integrated battery systems, but this particular opportunity will afford us the opportunity to get involved in cell design and battery pack design. So that's exciting. We've also won a sizable deal with an aerospace seat manufacturer. So this is a seat manufacturer that's focused predominantly upon business and first class seating. And what's significant about this particular opportunity is it's a great complement to the success and the momentum that we've established at Airbus. We've also won a couple of SDV deals, software-defined vehicle deals. And one of the deals that we are most excited about is the deal that we've secured with a commercial truck manufacturer, which cements our position in the middleware component of the SDV challenge, which certainly gives us the opportunity to demonstrate our credentials in terms of architecting the entire SDV technology stack.
Okay. Mr. Harris, also wanted to understand from you where do you see demand uptick coming in first from? Would it be the auto space? Will it be the EV space versus the aviation space? I wanted to understand this more because in the recent past you would have seen how the government, especially state governments in India, are taking steps to boost the EV sales. Incentives are being provided into some such areas. So there is this, different narrative being formed as to whether there is a slowdown in Motown, especially in the EV space, or is there not? How are you really assessing? Because you're the closest in that industry to help us understand that better.
Yeah, I think in terms of if we look at EVs globally, there are some concerns about tapering growth. If you look at Europe and North America, there's been some concerns with regard to the lack of infrastructure, the resale value of EVs, and the total cost of ownership challenge that continues to be something that many of the OEMs and their extended supply chain are grappling with. I think that distracts from the long-term trends. I think if you look at what's expected of vehicle sales this year, the 17 million EVs that are expected to be sold around the world, that's 1 in 5 vehicles. I think if you project through the next 10 years, that's going to extend from that particular position to about half of the vehicles being sold after 2030 that will be EVs. And from what we see, every OEM that expects to be competitive in the future is not only investing in the move to electric, but is also investing in connected and software-defined vehicles. They're investing in the move to autonomous driving and in the move to shared mobility. So we think that this once in a century transformation that's going on in the automotive industry is set to continue, and we think that will provide tailwinds for our business. We're also bullish about aerospace. If you look at the number of commercial aircraft that are in productive use today, it's about 23,000. By 2040, the industry expects to more than double that. And one of the biggest challenges that the aerospace industry is facing is manufacturing throughput. And we've got tremendous capability in and around smart manufacturing and we fully expect to be able to leverage that in the context of driving productivity and optimization improvements within the entire commercial aerospace sector.
Okay. Last two questions for you, Mr. Harris. FY25, what is your outlook in terms of growth? Will it be better than FY24? And where do you think the growth will come from? That's my first question. I'll come to the second question a little later.
Well, we don't provide specific guidance, but what I can say is that now we're through with the VinFast transition. We expect to drive sequential quarter-on-quarter growth, and we certainly are committed to ensuring that our business at the end of this year is bigger and more profitable than the business that we started with at the beginning of the year. So we continue to be bullish in terms of the demand environment, and as I said before, the macro trends that are informing the requirements that we're satisfying for our customers.
Right. And my last question is with respect to the upcoming union budget. We are just days away from that big bang event that everybody is looking forward to. Tell me, sir, you as the sector leader, how are you really looking at the upcoming union budget? Do you have a long list, a wish list for Finance Minister to fulfill? And what are the industry's expectations this time around? Can the budget be, something that can actually help drive growth further for the entire industry and sector that you belong to?
Yeah, I think if we look at what we would like to see in terms of budget, anything that stimulates the manufacturing sector and build in India, we are firmly aligned with the investments that many of our customers, global customers, are making here in India, and so anything that further reinforces the commitment of the country to that sector is important. The other area that we're really interested in is education. We are challenged in terms of the available talent here in India. Although India generates 1.2 million engineers a year, not all of them are fit for the requirements that we see within our business and we see for our customers. So anything that reinforces the investment in skill sets and capabilities that are required by our sector, we would certainly be excited to see that and whatever support that we can provide to the government in terms of specific advice, we'd be more than happy to provide it.
All right. Well, on that note, thank you so much, Mr. Harris. It's a pleasure to speak to you as is always and to host you on Business Today Television. I wish you all the very best for the upcoming quarters and hope for more interactions coming forward in the upcoming quarters as well as post-budget too, to see how many of these expectations have actually been met in the budget. Thank you so much.
Thank you so much. Much appreciated.
Thank you. With that, viewers, we wrap up this very special conversation with Tata Technologies, but do stay tuned as action continues on the other side with respect to the upcoming union budget. What are the big expectations coming up right next?